The U.S. death toll from coronavirus now at 11 people. Earlier this week, the World Health Organization, an official there, said 3.4% of reported patient cases globally have died. President Trump appeared last night on Fox News saying he doesn't believe those numbers.
This is just my hunch. But based on a lot of conversations with a lot of people that do this, because a lot of people will have this and it's very mild. They'll get better very rapidly. They don't even see a doctor. They don't even call a doctor. You never hear about those people. So you can't put them down in the category of the overall population in terms of this corona flu.
But there is still fear, and stocks are selling off today. Yahoo Finance's Julia LaRoche is standing by with Anthony Scaramucci, SkyBridge founder and managing partner, to tell us more. Julia?
Hey, thank you so much, Adam. And Anthony, thank you so much for having us here at SkyBridge, 15th anniversary.
We're here in the home office at SkyBridge. It's a lot of fun. Thank you, Julia, for being here.
Thank you so much. Well, I want to get your reaction to what we were just listening to, President Trump's comments yesterday on Sean Hannity's program, downplaying the coronavirus. What is your reaction to the president's response?
Well, listen, I want to be as fair as possible to the president because we are in a crisis. So you got to be very careful in a crisis not to overreact, but you also have to be careful in a crisis not to underreact. And so what you're hearing from him on Sean Hannity's show is a woeful underreaction. It's not saying that some of the elements of what he's saying is true. That's something the president does a good job of. He always sticks 3 or 4 fragments of truth into something he's saying that's quite distorting. And so for me, I think the virus is serious, particularly for people that are immunosuppressed and for older people. It's spreading. It's obviously going to be a pandemic. We have to take precautions that are measured and sensible, but we can't under-exaggerate what's going on either. And so I think that's a very dangerous position to be in. This could be President Trump's Hurricane Katrina, where his response and the response from the government is not measured to what is actually going on. Mm-hmm. And that sort of suppression nonsense doesn't work with the American people, particularly when you have places like Yahoo Finance where they can get real accurate, honest information.
Well, let's talk about the markets. We're seeing another sell-off today. What do you make of the reaction in the markets? How are you thinking about that here at SkyBridge?
Well, I've been on your air a lot. I said last week that we're in the most defensive position that we've been in 31 years. Today is the 15th anniversary of SkyBridge's founding in 2005. But over 31 years that I've been running money, less my 11-day fiasco in Washington, I'm looking at the markets. I don't like what I see. We're in late cycle economic expansion, which is fading. Production numbers are down. We've decided from the government, we can debate it, but we decided to put on heavy deficit spending late cycle. We've lowered rates now a couple of times, a big missile rate of down 50 2 days ago. You don't have a lot of room there if we go into a recession. Now, the Fed obviously could re-expand its balance sheet again, but I do believe that the Fed accidentally is creating the rise of populism and nationalism. In fact, I would say the global central banking system in their coordination has created things like Nigel Farage, Bernie Sanders, and Donald Trump, because the easy move is to lower rates, create lots of liquidity, let assets levitate upwards. But in the meantime, middle-class workers, middle-class families, lower-middle-class families have no assets, so they can't catch up with the very wealthy. Right. And that's where the anger is being expressed in the world right now.
Hurting the saving class.
So we're nervous about the markets. It's easy to see another 15% correction here. That's not to say that it's going to happen, because they're hitting the markets with everything. I mean, a 50 basis point rate cut and so forth. But what I really don't like is the economic slowdown. People are traveling less. Ports are not taking in as much shipments. There's a lot of different things that are going on right now that are going to cause profits to stall for the S&P 500, which is why I think there's more to go on the downside.
A couple things I want to unpack there. Going back to the rate cut, do you think that Fed Chair Jay Powell felt pressure from President Trump to act?
So the obvious answer is, of course, he felt pressure, but knowing him and knowing the people on that committee, I don't think they act with the president's tweets in mind. I think at the end of the day, for them, it's about their legacy and it's about them being independent and doing the right thing for the economy and the stability of the currency. So I'm sure that sort of jawboning jars them a little bit, but I think they're clear-eyed and very disciplined in acting in the self-interest of the economy and the stability of the currency, irrespective of what the president's tweeting.
Well, it's interesting, just looking at the action this week. On Wednesday, on the heels of Super Tuesday, you did see a little bit of a bounce back. I want to know if you think that is attributed to Joe Biden, and if you think that Joe Biden would be actually more friendly to the markets and the economy than President Trump.
Well, I can only go by my assessment and sort of like a consensus of the group of people that I talk to on Wall Street. Joe Biden would be viewed as somebody similar to Barack Obama. The negative of Joe Biden would be a resurgence of excess regulation. That is a negative. The positives, though, are stability. The positives are ending the nonsense coming out of the presidency. Unfortunately, Mr. Trump has a very, very low self-esteem, and so he's in a position where he needs constant aggravating attention to himself, and I think people are getting fatigued nationally about that. And so Joe Biden certainly ends that, and people can get more focused on business and less wired into nonsense that's irrational that's coming out of the White House.
Well, Anthony, Julie Hyman actually has a question for you, so I'm going to bring her in. Julie?
Hey, Anthony, good to talk to you. Congratulations on your 15-year anniversary there. I want to bring you back to coronavirus and its implications for the economy and therefore the election. Perhaps it's not politically correct to talk about, but incumbents tend to do worse if there's a recession, right? So what are then the implications for President Trump and his chances of winning re-election if this outbreak persists? And what does that do for Joe Biden or Bernie Sanders?
Okay, so again, just being clinically objective, a recession will certainly hurt the president. He sort of has a three-legged stool. He's run on border security, decreased regulation, and economic growth, and he's run on tariffs effectively and fighting it out with the Chinese. If you go into a recession, people will step back and say, okay, the Trump strategy of late cycle deficit spending, bellicosity of rhetoric, disruption of the hard and soft power of the United States is not working for the United States. If he loses the election, people will go back to last week's press conference, and that was actually a historic moment. I would argue that was probably the worst press conference in modern presidential history, because he's out there telling gigantic lies about something that is scientific and something that is health related. And so, people don't like that. And so if you're a nonpartisan investor, I happen to be a Republican, but I'm a nonpartisan, objective investor. When you're listening to the President of the United States tell lies like that, you're moving to cash, you're getting yourself into a defensive position. And so that took about $1 trillion out of the market, that press conference. And so right now, crisis getting worse. Particularly after Sean Hannity's interview with President Trump last night, market participants do not believe that they'll get the straight story from the White House or from President Trump. And so that's going to create more volatility, it's going to create more uncertainty, and it's going to cause voters around the country to say, okay, wait a minute, this sort of disruptive instability is not something that we need right now, where there's an international health scare. And so I think the market resurged yesterday because if Joe Biden does get the nomination, whatever Joe Biden's frailties are or weaknesses, the market looks at that and says, okay, maybe the American people will do better with more stability in Washington than the sort of nonsense that we've been experiencing, which is accelerating nonsense, by the way, over the last 18 months.
Anthony, I want to turn back to SkyBridge. You run $11 billion in AUM. You invest in a lot of hedge funds. You have clients who go through you all to get access to hedge funds. So this is a two-part question. What are you hearing from the hedge fund managers, the folks on Wall Street? What are their top concerns? And then what are you hearing from clients? What are their top concerns?
Well, I think hedge fund managers in general over the last 11 years have been more or less a drought born from monetary policy. And so you've got monetary policy jammed down to zero for 11 plus years. That levitates the markets. And so it makes it very difficult for the typical hedge fund manager to operate because they want to be short some things to reduce their volatility. But if everything's going up, it reduces their overall return. So in hindsight, over 11 years, a lot of people were better served in a low cost ETF that's tied to the market. But I think what's happening now is hedge fund managers, I think, we're going to come back into vogue because as the Fed exhausts its monetary policy and as the general public and politicians globally recognize, wait a minute, we have to solve for things like nationalism, we have to solve for things like populism, we have to solve for the low interest rates that our savers around the world that are getting and are very frustrated by. I do think hedge fund managers are going to come back into vogue. So that's probably too long-winded of an answer, but here's what I would say. You're in a late cycle. The United States is not going to cheat economic history. This is not Australia where we can go 28, 29 years of economic expansion, just a totally different cyclical environment. And we're not going to be able to cheat history forever. You will have a roll in corporate profits and you will have a recession. The question is when. And when that happens, that will bode well for hedge fund managers because they have the versatility and they have the product suite that they can deploy for their clients that's very different from just toggling long stocks, long bonds, or cash.
Anthony Scaramucci, founder and managing partner of SkyBridge Capital. Thank you so much. We're going to have more with you today.
I was 6'4" when we started, and now I'm like Mike Bloomberg's height without Mike Bloomberg's money. But we're hoping to make it another 15 years.
We'll have more with you today from the 15th anniversary. Julie, Adam, back to you all.
I think Anthony's okay in that department. Thank you so much, guys. Appreciate it.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.